Welcome to Trading Nation. I'm Mike Santoli. Tesla making a U-turn. The stock up 22% this month. That is a major reversal for the electric automaker, which has struggled a bit this year amid concerns around production and demand. We're joined now by Tasha Keeney, an analyst at ARK Invest, covering industrial innovation, autonomous driving, and more, to discuss that firm's bull case and what is ahead for innovation in the auto industry. Tasha, good to talk to you here. I want you to sort of lay out the big picture take on Tesla, where it fits within the autonomous driving initiative and revolution you foresee here. And specifically, it's interesting here because we're fixating on Tesla's weekly production run of new cars, and you're projecting out a number of years to what Tesla might be able to do in autonomous driving. How does that all fit together?
Yeah, so, to start, we think the autonomous driving market is going to be a huge opportunity. We think this should be valued at $2 trillion today in the equity markets, and it's virtually unaccounted for. We think Tesla has a great lead there, and that's because of the data advantage that they have. They're the only automaker collecting data from customer cars. They use that to train their machine learning algorithms, and we think that's what's really going to pay off in solving for those last few percentage points to autonomy. Now, you're absolutely right that often people focus on the short term, the production, delivery figures, and there's this idea that Tesla has a demand problem for electric vehicles. Well, we also think that the electric vehicle market will surprise to the upside. We think there'll be 26 million EVs sold by 2023. And we think that many forecasts aren't accounting for that because we've actually done the work on the battery cost declines for the batteries that go into these vehicles. And that change in sticker price is what we think is going to drive demand.
And it just 26 million cumulatively by that point, or per year?
That is the global EVs sold in 2023, yeah.
Got it, okay. Now, do you think that it is Tesla's own objective here and strategy that these vehicles right now that they're trying to sell for between $35,000 and $70,000 or $90,000 are just a Trojan horse to get them into pole position for autonomous driving?
Absolutely. I mean, we saw with the release of the standard version of the Model 3 that if you lease a Model 3, Tesla actually doesn't allow you to buy that car after the lease. And we think that's because they want to seed their autonomous vehicle market. And in fact, they've said that. They've been talking about launching the Tesla network for some time, their version of Uber. And we might even see them launch ride-hailing just to sort of test out the kinks in the system before they reach full autonomy. So that could even happen in the next, say, year or so if they want to do that ahead of time. And we think that's what they should do.
In this world of full autonomy, where are the economics going to be? Where are they going to accrue most? Is it just going to be software? Is it going to be the maker of the vehicles or some other operator of a network? And where do Uber and Lyft fit into that?
Yeah, that's a great question. So we think that most of the economics will go to the platform provider. So these are really the companies that own the full technology stack. The companies that are actually making the car autonomous, that have that software advantage, and will get those nice software-like margins. So Tesla sits nicely in that place. They're also a vehicle producer. We think that other auto companies with successful EV platforms will still have a role here, but they'll have to partner with technology companies. And Uber and Lyft could potentially have a role as well, but again, it would have to be through partnership with a technology company that could actually provide that autonomy, because it doesn't seem like Uber and Lyft right now have credible autonomous driving programs in-house today. Now, when they do that, they won't enjoy the same economics that they get as ride-hailing firms. Right now, they take a 20+% cut of gross revenue. We think that's going to be in the low percentage points in sort of that future picture where they're really just a partner for the platform provider.
Now, you at ARK have talked about how Tesla, should be worth something like $4,000 a share if all this plays out. But where are the pitfalls in that possible scenario? I mean, obviously, you still have a company here that has some debt, that is likely to have to raise more capital down the road. Where can it run off course?
Yeah, so actually in our bear case, we're assuming that Tesla doesn't get to full autonomy at all. So I guess that's what you could assume on the downside. And if that happens, again, because we think electric vehicles on their own will be a huge market, we actually think the stock could go to 500 to 600 in the next 5 years. And we're also assuming an equity raise with that. We'd be okay with Tesla raising more capital in order to scale production and maintain their leadership in this field. And that's we really think they're years ahead of the competition today on battery production alone. So we just want them to get as much market share as possible, get as many cars on the road as possible.
And just finally, let's say that 2023 electric vehicle projection of 26 million global sales. What would you assume as Tesla's market share of that?
Yeah, so our bear case has them losing a third of their market share today in EVs, and our bear case has them losing 2/3 of their market share today, and our bull case has them losing 1/3. So they'd be say in the teens or at 11% of the market in both of their scenarios. So we actually are assuming that they lose share, but again, it's because the EV market is going to be much larger than we think most people will expect.
Yeah, gotcha. Tasha, thank you very much for laying it out for us. Tasha Keeney of ARK, appreciate it. And thank you for watching Trading Nation. I'm Mike Santoli. We'll see you next time.